The broadcast is now starting. All attendees are in listen-only mode.
Good morning and welcome to the Morning Bell. I'm Keith Harwood here for Yellow Tunnel and Tradespoon. As a reminder, options involve substantial risk and are not suitable for all investors. Tradespoon and myself are not investment advisors, not registered with the SEC nor with FINRA. Please remember that the information in this presentation is provided solely for educational and information purposes only and should not be considered trade advice. The presenter of this video, Keith Harwood, or the team at Tradespoon may have a financial interest in the securities presented in the trade ideas, so please keep that in mind as you evaluate these ideas and thought processes for your own individual trading and investing accounts. So pretty ho-hum day in the market, right, guys? I think it was a bit of a surprise here to see the margin of the victory so far. And honestly, I was not expecting to have a result by this time of day, but the market clearly likes it. And that's what I'm here to evaluate, is what the market likes and what the market hates. For example, we are seeing China and Mexico down today. Small caps up significantly. Financials really seem to be leading the pack. Bitcoin going kind of nuts. Somewhat surprisingly, actually, DJT is only up a little bit. I actually thought that was going to be a much bigger winner in this scenario, but apparently, that's why I don't trade that stock, frankly. But overall, there are still some still some stocks setting up some interesting technical formations. Others that I think we're going to need a little bit of digestion period before I start looking for my longer term, month or multi-month holding periods. But some of them that are in, I can let them ride and use more of a trailing stop. I just I think it's a very interesting market right now, and I have to be selective because almost anything I look at right now looks like a buy. And when I see something that has a situation where almost anything looks like a buy, that can honestly just lead to saying, I want to buy into SPY, or I want to buy into Bitcoin, I want to buy into oil. Oh, sorry, oil companies, not energy companies, not oil, the commodity. But we'll kind of evaluate some of those setups, see what may just be better to let digest, and other stuff that may have a better probability of success, as implied volatility should continue to come down with this news behind us now and the known being there. If you do have stocks that you guys like or want to look at, do please make sure to throw those into the Q&A box, because like I said, I can pull up 1,000 charts that look bullish, a handful of charts that look bearish, but if they're not of interest for you guys, then they may not be the ones that are best to focus on. And we do still have some interesting earnings coming up, and those should start to be interesting as well, because some of them I think may have gotten a little bit less of a move off of the election, since the earnings are coming out this afternoon or tomorrow morning. And that should actually have a big impact, depending upon what as a result of potential policy changes coming in here. What do I think we can fade the rally on? That is the big question right now, right? So I'll look at a couple of ideas of where maybe there could be a rally fade. Maybe the market got a little over exuberant. That's a good thing to look at here. I mean, honestly, for me, I had added two names yesterday at the close, as I mentioned. I had Wayfair and a little bit more into Path for the artificial intelligence name. Path was good. Wayfair is starting to look like it was setting up a bear flag with the results in place. So looking at now bearishness in Wayfair after adding bullish yesterday. So, we'll see how it goes. The fight or flight response right now for the market, it's all about jumping in. Fading the move is a bit about fighting the magnitude of the move, or more than a bit about fighting the magnitude of the move. It's truly looking at the move and saying, this is out of control. We've moved too much, too fast, either or, and then trying to evaluate what could come back and how could I profit off of that. Is it a straight up put spread type situation? Like an out of the money debit vertical? Is it just using a credit call spread, or an in the money debit put spread, something like that, to try to bet on less upside than the market may be pricing in right now? Some of that will come from seeing what the options do as we go through today's trading session as well. What I'm thinking about in terms of stuff to fade the move is letting the market start to tell me some of that, though. I look at some of the earnings that looked really bullish, but then pulled back afterwards. I'm looking for similar type of setups where we get a pullback, get into less than half the move throughout the day. Those could go back towards unchanged from the market move overall over the course of the next week. Those that close near the highs today just mean that everybody agrees, and it may still have further upside before the ultimate fade comes into play. So kind of let those ones that are still being bought run until we get to a point where we find the market willing to fight against that bullish flow. It's very game theory-esque on that sense, right? Moving now versus moving later. So as you guys know, I've got a lot of cash on the side today. I'm not looking to do anything on the open. I want to wait, give it a couple of hours to list moves and end of year based moves. Maybe even a day, wait till tomorrow during the day. I'm starting to develop a bit of a list of names that I think could be interesting depending upon the way the technical is set up. But I don't want to just pile into half a dozen names immediately with this move already getting a bit frothy, to say the least. I mean, IWM up 6%. That is a big move for an election result. And that, for me, may be something that I'd rather see if I can get in a couple percent lower than here. Since, I do think that we've maybe overdone some of these moves on the initial reaction. Panic buying mode kind of seeming to set into the market. Looking for a little bit more tempered moves and stuff that can just kind of grind out those profits and compound my investments. The probability of success certainly leans to the upside in general, but that return on capital is going to be diminished given the magnitude of the move we've already seen. 4.5. Honestly, I thought this was going to be like a new high in DJT, and actually that's one of the first charts I've pulled up, just to show that the market doesn't always buy into exactly what we all may think. And maybe DJT does have further upside right now. It's a stock I normally don't trade very much at all, because the implied volatility is so high. I don't get a ton of leverage out of the options. It's a very parabolic type mover. And I want to look at that a little bit closer here over the coming days to see if the implied volatility falls now that this is known. Then that actually might start setting up a more interesting trade there. There are still shorts out there, like I mentioned, selectively. With the VIX falling, I can now start to add more time and space to the market because the implied volatility is falling, so options are getting cheaper. So that means they can get a little bit more leverage at a cheaper price. We had a big move, like I said, bigger than I was expecting. I think bigger than the market was expecting, especially, like I said, in the VIX falls, and we can start looking for some more tempered moves and some more traditional movement style. And I think that'll be interesting to see how that all plays out here in the coming hours, days, and weeks. And I think today in particular, waiting towards the end of the day can be a very valuable thing. There is a lot of day trading that one can do today. So if day trading is your style, we may have some whipsaw around today as people start to reposition portfolios for the new regime, the new setup, the new expected, what's the word I'm looking for? The new expected policies going into effect. And, when Biden won the election, we basically watched oil just march higher for 2 or 3 months post-election. So oil could be actually a big spot for looking for a trend here after the initial smaller fall. Oil prices alone on their own may come down. How that's going to impact all of the individual companies is going to be all about the margin that they can get on their gas. In a lot of those, like the Exxon Mobils and the BPs and the Shells, it's about the margin situation. So if we're seeing oil prices fall, but they still got margin, that can be okay. If oil prices fall too much, then people do tend to panic out of oil names. And the initial reaction, though, is like OIH up pretty significantly. Still don't want to sell naked options. Keep that in mind. For those names that are getting hit, I'm going to be looking for signs of the bottoming process, or for the extension downside, get a little bit lower here. It starts to look as a bearish position. But this may just be an initial reaction overdone to the downside with a recovery afterwards, and I want to look at that a little bit closer today. I will say I want to touch on CCJ because earnings are after the close today, and it got a nice rally today. So Kamiko's up, but like I said, China down, Mexico down. It could be a time for a lot of people to start to reevaluate some of these names and take the profits and start over. Coming with a clean slate can be a very positive position to be in right now, having the cash to just allocate to the best ideas instead of what was there based upon previous technicals. Yeah, solar getting crushed too. Thank you for that. I mean, so yeah, DJT up to 45 now. It's going to be into the 60s, 65 range. So at 45, 33% move. I don't want to trade it today, but it is just a wild move there. We've got SPY up 2%. So pretty solid move in SPY. That's going to put us just above the previous high. So we've got a new high in the spiders. We'll have a new, right at the highs in tech. I guess it's not technically a new high yet. So we're just below highs in tech. Small caps up 6.3% now, another 50 cents added on. That's certainly a new high, just blew right through everything. We're seeing some serious allocation into the small caps and the financials. So you look at XLF, there we are, up 5% today, 49.02, the high there. Let me see what other sectors I saw as big moves relative to the norm today. We had, of course, KRE, same idea. OXLI, Caterpillar getting huge money flow. The biggest loser right now in terms of the standard deviations is gold. Sunrun, TAN as a sector. I mean, ICLN, which the biggest holding, I believe, in ICLN, I got to wait 1 minute here for the markets open, but the biggest holding in ICLN, I believe, is Tesla. And Tesla is up nicely, but ICLN down 8% as the solar name's just dominating that move. So we're anything solar, not so good. And with oil prices down, we are seeing XLE and OIH up. So a little disconnect there, but I gotta believe that that's all just about the expectation for domestic companies performing well on this oil move as opposed to the global oil situation. Apple, very minimal move here. So some of them set up a better technical setup and remove some of the premium there. So yeah, you see ICLN down to 1240 here. Tesla, I mentioned, just running here up $32. Musk is tied in with Trump pretty well, so that's no surprise there. But like First Solar, you can see down 15% here, testing the lows. Run, I mentioned, that's getting hit the hardest in terms of standard deviations on the solar names after a nice 2-day run, now testing the lows. So I want to watch these solar names. If we continue to see break, I'd like to not see it today, frankly. I'd like to see us consolidate here near the bottom and put some question marks into whether this is a value buying zone for the solar so that we get some investors jumping in and then start to break further. That would be the best setup for me on a technical basis, is find buyers here, act like a bottoming process, and then give me the clarity on it in, not today, maybe Friday, maybe Monday. For now, it's certainly not getting any love. Let's go to off the S&P. I want to just touch on the VIX and the skew. So the VIX down 4.5%, right down to 16. We're likely to drift down towards 14, it seems. The initial move down just below 16, no surprise there. SKUDEX coming down, so people are naked just selling puts, saying there's no downside to this market. VIX down, SKU down. So puts getting hit harder than the at-the-money options. If anything, people might be coming in and starting to look to buy some calls for an extension of the move, but I'm not sure I'm ready to pile into that trade right now, given the magnitude of the move we've had already. Tech is, like I said, right at the highs. Semiconductors underperforming, so they're up the same percentage as tech. We should see twice the move. The implied volatility is twice as much, so we should be seeing twice the move. And you can see we still have a lot of room to run to get back to the previous highs, 283. So I want to look into semiconductors over Micron, looking at AMD, look at potential that semiconductors can get some movement. Micron is of interest here as it's starting to get above the 100-day moving average and above some of the maybe AMD a little bit less so, given that it had the poor earnings. This may be setting up more of a bear flag. So, it's a little bit of a mixed bag within the semiconductors names. I would lean towards bear flags for those that had bearish earnings. And if I'm bullish, I look for the ones that had good earnings recently. Intel was slightly weak. NXPI was very weak on earnings, bouncing back. Maybe that's more of a selling opportunity. MCHP had earnings yesterday evening. And so not much move there, a little bit down. So their earnings looked a little bit weak, and they are getting held up, I think, overall by the fact that the market is just up so much right now. Banks are certainly getting a lot of love right now. I mean, XLF just, the big banks getting huge money flow here. It's just untradeable to me to jump into JP Morgan or, Wells Fargo. If not in, it's a no trade. I have longer term trending portfolio, and I'll probably look to actually exit those today, just take the money and run for those. So it's just, it's just so much movement. It's hard to say that this is just going to continue. I'll look towards the end of the day. I think I'll look for the exits and maybe even a small pullback, just given that this size, this move. I mean, the regional banks actually a little less bullish overall, 10% up. Normal should be about close to, I guess it's about the same as XLF in terms of a percentage move. It just looks like XLF has been doing better and regionals have been underperforming a little bit. I can go into all the individuals here. RF, Zion, KeyBank, they're all just going nuts here. There we go. The chart was showing red, and that's clearly not the case. Maybe it knows what's going to happen by the end of the day, and we're back to unchanged. But overall, banks should do well. But is this move too much? That's the question for that. And these are the names that then I look for. The fact of the matter is the implied volatility hasn't come down because of the magnitude of the move. This could be a debit call spread type setup for a lot of these banks, expecting that the move upside is going to be pretty tempered for now. But we don't really have good markets in a lot of them. Maybe in XLF, we can get a decent market. No surprise here, the market makers have no idea how to price this stuff until we start to get some order flow. I would not be surprised at all, though, to see XLF chill around 50. We've got a lot of open interest in December 50s. There's not much premium above it, but you can make a little bit of money in selling some 51s, maybe these 30 delta options, and just doing it as a call spread. It's a very small premium still, though. I mean, collecting maybe 40, there we go, 45 versus a dime, so 35 cents for that 51.53 call spread. The synthetic on the put spread would be paying $1.65 for the put spread, looking to exit around $1.90. It's a quick 15% over the course of a month and a half, but those are some of the smaller, I think, safer, higher probability of success, lower return on capital elements in the short, even further from the 15, 16, 16.5% that we're seeing right now towards 13%. That can be, I think, something that could be of interest there. DJT is going to be all over the place today, to say the least, I think. Let's look at Ford for you. So poor earnings, bouncing back. I think I like GM better. Good earnings, had the bull flag, now getting a little continuation, just getting to a new high. While Ford looks like it may have some more upside since it's been hit so hard, it's going to have a lot more resistance gap. So if I wanted to go into, and then if that does all work, rotate into Ford above 1140. So another move like today, and we get above 1140, above this resistance point, then I look at Ford. For now, I don't know if Ford's going to go and press that 1140 level and push through it, or if it's going to pull back and be like, AMD might look like it's setting up for me, where it's more of a bear flag type of setup where we get an initial pop and you can see the market's already selling a little bit in AMD since the move is just not particularly aggressive there. Actually, we are getting a bit of a pullback here down to 5% up in IWM. So the initial reaction is to fade the move a little bit here. And now it's going to be looking down into the shorter term chart, like looking at the daily chart, looking at the 5-minute bars and just seeing, I can just go to 5 days, watching these little 5-minute charts and looking for the same sort of setups I look at on the daily chart, but trading it for a day or two rather than for a longer term holding position, and looking for those longer term holds in the coming days as the market settles into its new trends. It's very wild today. I can actually, as I'm looking, run just getting hit further and further here. So I do a scan of about the top 500 volume stocks in the market, and the biggest mover on the day right now on a standard deviation basis is Run. It is down 9.5 standard deviations at $4 relative to the normal move. So you see the historical volatility has been around 50%, implied volatility at 110 because we've got earnings after the market today. Clearly, the market is very worried about these names. First Solar might be a little safer because the implied volatility is closer and we don't have that earnings input that could shift it a little bit. And we are making that new low now, which is frankly not what I necessarily wanted today. We should look at Bitcoin as another just big benefactor of the election here. So new high. Ultimately hit 75 and then started to pull back, but that's the new high. That trend, I think, can continue. So while we've had a big move here, I think the trend of Bitcoin can work. I remove BTDR, but there's so many Bitcoin names to look at. BTDR looks interesting here. I got to think upside towards 11. Mara that I've got on my charts, I can just click back up into that range from 18 to 23. So I'm looking for that to continue. I just want to see this implied volatility come down. And part of this is the earnings. Riot had earnings already, up 12% today, pressing this $11 range and looking like it wants to go to 13. So these are names that I think could have some good continuation. Coinbase, MSTR. Coinbase already had earnings, so a little bit more love there. It's going to get a lot of interest now for the rest of the year, and I think people are going to start allocating potentially that much, portion of their assets to Bitcoin, knowing that that is one of the big trading themes of Trump winning was the trade being a bull case, and so that could give some big flow to Coinbase. In particular, as that should increase the trading volume for crypto. MSTR, let's pull her up. MicroStrategy, right to the highs. So really above 265, it gets interesting. I mean, we've already had 13% today, though. So I do still believe I want to stay away from the marathon with earnings next week. Focus on the names that already had earnings, and they could just trade more likely to be, an underperforming earnings announcement, because most of the Bitcoin names said that they basically got, or the crypto names said that they were not benefactors of a very limited volume in crypto in the past quarter. The future expectations are for certainly a lot of volume. I definitely need to touch on gold because I've been talking about the 252, 247 put spread there in December. We got the move. Implied volatility should continue to fall For me, this is time to reevaluate. Staying bearish can make some sense, but now targeting like 240. So instead of the 252, 247 put spread, which is up to about $3, I think maybe a 245, 240 put spread for under $2, and just trade for that continuation of weakness in gold. 10-year yields, as I didn't discuss too much here, are higher. We're still waiting for the official results on whether we have the red sweep, 4.5%, the 4.65. If yields continue to rise, that also should be beneficial to banks. So all in all, just a very wild start to the day, but it's got a lot of good interest here. I think the TLT's fall is going to be off of that concept that the market probably grinds up and we go down towards that same low that we had in May, maybe a little bit lower, so into the 88 range. That's not huge leverage. You see the implied volatility getting smoked in TLT here as it falls. What's the December? Getting down to 88. I mean, we've got markets pricing in that potential for a break even further. That seems over aggressive. Can we get back to 92 by the end of the year? I'm not sure we can. So like selling a 92, 94 call spread, that might be one of the safest looking credit spreads right now out there. Selling like a 92, 94 or 92, 95 call spread as a way to get some of that premium. So like the 92, 95 put spread should be trading around, what is that? And that seems like a relatively safe credit spread for now for TLT, looking to just, or debit spread on the put side or credit spread on the call side, looking for this to, if it bounces, have a very muted bounce and not move towards prior levels here in the 92, 93 range. I just don't know that I can see a justification for that without some major shift in the Fed that I don't think we'll necessarily see before the end of the year. Even if the economic data comes out a little bit, weak and we start to see, or, whatever, if we're starting to see some economic data that justifies a fall in interest rates, the future stuff limit the potential bounce back in TLT into the end of the year. So that's, I think, maybe one of the better thought processes here for me is looking at TLT as a muted upside for a credit spread in the current regime. USO actually bouncing back a little bit here. That's kind of interesting that USO is bouncing back. I may want to look at that a little bit more for potential for oil prices to fall here towards 69 or even lower. That could be another interesting theme going out even into January with like an out of the money put spread similar to what I was talking about in gold. Like if we can go to 67, the previous low. The markets are a little wide right now, but as they tighten up and the market bounces back in USO, a 72.67 put spread for $1.60. It's going to be a little more than that, maybe. That's $1.60 at 210, so $1.85 right now. That could have some interesting leverage as well. So bearish on oil and gold, anti-bullish in TLT, i.e. the out of the money credit spread or in the money put spread. And then I think we should look at some of the earnings that are coming up tonight and tomorrow morning, because those can have a quick shift in their individual setups outside of what we're seeing in the market here. The aggressive power trader idea is BLK. It's a very expensive stock, but already has pulled back pretty significantly. If it stays around here on around unchanged, I would not be looking to do anything with that. I'd like it to be closer to the opening price. CRM, if it stays around the price that it opened today, it tells me that there's no real major selling and profit taking there, and that can be a better trade idea. SPY, if it stays around here, then it does seem like it holds. But if it pulls back below the prior low, we start to set up for that theory that it is fade the move, take the money and run, and we're rejecting higher prices for now. And then I wait for a bull flag. The last one's Walmart here. And as long as that stays above the prior high, again, I think that that's okay. I'd rather see it around 84.60, 84.70 than 84. And I know we're talking about seemingly small numbers here, but that's just part of the market dynamic and making sure we don't get below the prior high as a fade the move situation here. All right. Yeah, so W bearish. So should have not done anything yesterday, it turns out, and that at least Path makes up for it. But Wayfair below 38. It's not a bounce back candidate for me right now. I'll give it a few hours to see if we do start to bounce back. If we get back above 40, what was the open? 40 and a half, then maybe it's okay. But for now, I'd be leaning towards looking for the bearish setup in Wayfair after all. For me, I'll just look to exit and walk away from it. Give myself a day or two to think through what to do in Wayfair and focus on other stocks just because I just had the loss, will have just experienced the loss on it. I prefer not to completely flip and go from bullish to bearish to this within 24 hours of a name. But I am not looking for a new trade personally in this. Under 38, though, it would be starting up a bearish trade potential for the technical setup. Ooh, SMCI, continuing weakness here. They're just a disaster right now with their investigations and their fundamentals. I mean, I don't know how low that can go, but this is not looking good for them. Their normal move on earnings is around 14%, currently seeing down 25% with a combination of their announcement as well as that follow through. That looks pretty darn nasty. GameStop up here. I want to look at some of these others. XLU and XLI. I should just touch on XLU, weak. Although bouncing back today. So maybe that low is in. Certainly not looking like it in NEE. Duke Energy has earnings tomorrow pre-market. If Duke Energy earnings give that a bounce back, then utilities start to become of interest. I want to wait for Duke Energy before I do anything in XLU though. XLI up 2.5% now, pulling back just below the prior highs. Caterpillar was killing it. I will say LMT. I am shocked that is back to unchanged, to be honest. I was looking at that this morning at 560, thinking this could be an interesting buy. So as the market tells me that this may not be a buy, maybe Raytheon's okay. Yeah, so Raytheon looks better than Lockheed Martin for now. Here in this range, maybe playing a debit spread targeting the prior high of the range, like around 127. That could be an interesting one on the bull side. GE. That looks very similar to Raytheon here, targeting like 192. CGD, General Dynamics as well. Yeah, so a little pullback in the industrials after the initial bump. Boeing down. Boeing looks pretty nasty right now. A new low there sets that up for a very much bearish trade. So keep an eye on that for a bearish trade. The airlines initially bullish. Is that holding? Yes, that's holding. American looks good. United looks very good. Done a debit spread in United. That should be in pretty good shape here. Delta also very good. Very similar to United. Love could be maybe an interesting setup for a trade here if that gets to back to the prior highs. Then looking to add there. United and Delta clearly the stronger ones right now though. So as long as those hold up throughout the day, that's not getting the fade the move reaction. Small cap's only up 4% now. So we're definitely fading the move, taking the profits for the bull. That actually I prefer for my setups going forward, because now it doesn't feel as aggressive on the just chasing in and continuing to buy and getting into panic buying mode. I prefer to see that the market is willing to take some profits in some select names and then getting those entry points based upon the prior highs. So this is actually almost maybe consider one of the better setups for the upside. What doesn't look good are marijuana stocks. Proposition, what was it, 3 in Florida? No recreational marijuana use there. MJ down 15%. So marijuana not getting any love. And those become, I mean, they're all very low dollar stocks, but I don't think those are looking for upside here anytime soon. So I'll probably just ignore most of them since they're such low dollar stocks already. But if people like to bet on like bankruptcy for a sector, looking at some of the marijuana based stocks could be a bit interesting here. Walgreens, nothing there yet. CVS looks really good after their earnings. So I'll watch CVS here, maybe set up a little bit of a bull flag post earnings here and look to get in if we dip for a couple of days and then start to rally again. That's Target look. And so they're weak. Started up and now down on the day and breaking through support. Wow. Just a very interesting overall move between the initial buying and now finding which names are getting sold off. AI continuing to hold pretty firm here. Path pulling back after that initial pop, but I guess it's right at the opening price, so that's okay. Best performing stock right now on the bull side is that I'm watching is Goldman. No surprises there. Is Geo Group. Earnings tomorrow pre-market. A government service provider. Okay. So apparently that's good for them with the government service providing operations that they've got off of the election, because they went up 30% off of the election results. They must be tied. Yeah, I believe that's the case, Fred, that W is more likely down on tariff concerns. As you see, like China dropping, EWW, Mexico down 4.5% today. So we're seeing some of the natural expected sellers off of the tariff side of things. That's what we are bouncing off of those lows. So 38 has not broken yet. It has held so far. And if we're seeing some sellers of some things that had initially started bullish, like the Targets of the world, maybe some of the selling has actually gotten overdone in the Wayfairs of the world as well. So got to watch that for where the value comes in. And I think that'll be determined in the coming days. First Solar just holding here near those lows. So yeah, I want to keep watching these names that are right at those inflection points of that support level to see if they push through, and then see if that can set up a bearish put spread trade there. MU 115. So I look for the earnings day high, 114.80. And as long as it stays above 105.62, I still like that. If we start getting below yesterday's high, yesterday's close, 105 starts to become a bigger concern that the semiconductors as a whole are just dragging it down. What's SMH up now? Less than 1%. So underperforming further. Tech holding up, but semiconductors pulling back. That's not a good sign for the semiconductor sector at all by any means. Apple still unchanged. Apple starting to look like it just wants to grind to 235, so that can be a bit of a safer trade as long as it holds up on the day. Amazon chilling at 200. PLTR was pushing through. Is that still going? Yep, 53 now. The election loves a lot of these names right now and hates the others, right? I think that's the biggest thing, though, is like looking at that TLT trade. Actually, to me, it seems like the highest probability of staying below 92 and into this bounce back. I mean, if we can get up to like 90 and a half, 91 today, then I can get a little bit more premium. But even here, I'm not that worried about. This is up to 70. It's still 70 cents, effectively unchanged on the call spread on the minor bounce back. But implied volatility should drop towards 13 or 12 and a half. Maybe it needs to keep a little bit of premium for the Fed tomorrow, but I'm not sure I would bet on TLT having any real bullishness. How is our big pharma looking? Amgen fading the rally. Eli Lilly, very nasty. Novo Nordisk, a little nasty after their earnings, but not terrible. I don't know on those. Qualcomm for earnings, coming off of this unchanged, I think sets this up decently for their earnings. 8% is $12.50, so 155 now on the downside instead of 152.5. But I like that range. That's okay. 155 on the downside, 185 on the upside. I liked 180 better, but 185 could be in the cards now. 180 and 190. I wonder if the election's just kind of wiping out the earnings-based trade for that a little bit. The original earnings thought process here. $2.50-ish for Lyft, $3 if we can get to 20% mover. So looking at 11, I'm looking up at about 16.5 to 17 range. And the open interest is fairly spread on the upside, but we're building some 17 volume here. So maybe 11, 17. 11 and 17 might be the good target prices here. And then that's where I play around with like $1 wide butterflies, 12, 11, 10, 16, 17, 18, and then cross my fingers that one works out. But that does still look attractive to me for Lyft. Trip, I was looking at 15 and 18 and a half, but that's up a bit today. What's like Expedia doing? Are all of the, they're all getting some money here. People want to travel apparently off of the election results. Marriott, yep, Hilton, yep, Hyatt. Yeah, so all the hotel names are getting a good run here. I'd probably say that's to let those, I want to let those digest a little bit, but that'll take away that trade for me. CCJ fading, so I guess I should have been taking the profits right on the open here. Now that we've moved back, this is normally about a 5% move or $2.50, maybe a little bit more. That would push us to 54.5 range on the upside. If I go for $3, downside about 49 to 48.5 to 49. We do know that the aggressor here had been the buyer on 65s, the 50, or he was buying the 55-60 call spread, and he eventually started selling some 60-65s, it looks like. And he's holding it for earnings, maybe just because he sees the leverage there. If we get back up towards highs, I'll probably just take off half prior to earnings tomorrow morning of my position. I don't want to look for a double fly here. The open interest is certainly on the bull side. The downside, there is some 48 here and some 55, but I got to believe that the market is pricing for bullishness out of CCJ. Halliburton has earnings tomorrow morning. We've generally seen bullish earnings announcements, but they've already moved now that much in preparation for it, so not much there. Street could be interesting. So TPR for the last 5 years has come out bullish outside of a couple of announcements in 2021 during had to cancel that acquisition of Capri Holdings that you can see drop down to $20, $21. But the norm here in Tapestry is around 4%. We're pricing 7. I mean, 47 and 52 seem very natural as technical resistances. Markets are kind of wide, but looking for 47 and 52 with dollar wide put and call flies can be a way to get some leverage for a very cheap execution. You know, looking at the 49, 47, 46, if these markets tighten up, that should be around like a nickel on the put and around a nickel on the call for 51, 52, 53. So $1.60, 45 credit, and maybe a dime for each. So maybe that could be of interest there. How about Penn for gambling with their earnings tomorrow morning? 10%, so $2, 17, maybe 17 and a half. So $1.80 on the downside, then 21 on the upside. So 17 and a half and 21 would be kind of the normal move here. It's not a ton of open interest, but again, halves need to just tighten up to get us a real market. But throughout the day, this might become an interesting trade, looking for 17 and a half or 21 off of an earnings play. All right. GME, yeah, look, I was looking at GME here with their jump. That actually is a little bit of a concern for me because when I see GameStop running, it usually means people are running out of ideas, but maybe there's something about Republicans in the president's seat that makes GameStop better, maybe for financing reasons or something. I don't know. But I got to watch that. If this starts getting up towards 25, 26, maybe we see another squeeze in GameStop. There was some unusual flow. Then one big order on the weekly 22s. Okay. Yeah, and there's some big money going after the 25s for this week as well right now. Not huge, 5,000, but we're starting to see some building buyers of the 25 calls here. And there's not much open interest after 25. I mean, there's a big January 25 position. Looks like somebody's long a 20-25 call spread with the 20,000 open interest on each. I don't know if they're long, the 30 calls are short above. Big open interest all the way up at Jan 60s for the and the Jan 125s for the real squeezes. Those should be watched if we start getting above 25. I don't know how much panic buying goes into GameStop, but that could be a very interesting one. Let's see now. What else is solidifying here? So now we've got still Goldman, Keyban, XLF, Morgan Stanley, KKR, the tax man into it. And that's getting, it started now pulling back a little bit after peaking at 665. I don't see anything there from a technical basis to trade yet. Yeah, I mean, pick a bank and buy it almost, right? JP Morgan, 240 here. Goldman, 580 still. Yeah, I just don't know if this move is too much. I mean, 10% in Goldman is wild for Goldman, right? I mean, that's a 7 standard deviation move based on the normal 1.5% daily move. So if we're getting a 7 standard deviation move, is that enough? Is that too much? Or is that just getting started and now we grind towards 600? Does JP Morgan stop moving after 8.5%, another, what is that, 6 or 7 standard deviation move? Or is it just now going to grind a little bit? I think this move starts to slow at the very least. And that might mean that we've got some in the money debit spread opportunities here if we do get a little bit of a dip, like 47, 48 in XLF. You know, it's 80 cents. I'm only going to collect, almost 80 cents. It's about 70. What do we get? 75 cents, 76 cents. So I can get to like 90 on it maybe. So 20% over the course of a month and a half. Same idea as TLT in that, I guess, in terms of a percentage, but TLT seems a little safer than XLF overall. Yeah, I think that for today, for me, and that's the same as you, Fred, I think, for today, for me, I don't want to buy XLF, but if we get some nice consolidation and then grinding higher, then I can utilize that a little bit better. We got some movement in hood here. What are they doing? Half. Looks like some profit taking, selling some Jan 25s right now. Yeah, somebody's taking the money on the Jan 25, selling those out at $3.95, $4 range. Take the money and run for some out there that had been betting bullish or betting on this move. I guess that's not shocking, right? As these moves happen and you get that money, it can be very tempting to take the money, and then we just look for that next buyer that gets more aggressive and says that they're willing to continue to push new highs. So it's some market participants want to take the money and recenter and potentially reposition. I mean, after selling out these January 25s in Robinhood, for example, somebody may come in today, tomorrow, next week and start looking at January 30s or longer term going out to June 30s or something like that to play for continued upside. I think we'll probably see a lot of the same in like Tesla. Right now on some of these bigger names where we're getting good volume. If people are closing these, that tells me one thing, versus if they're opening out of the money calls and implied volatility is falling, they're likely sellers. If the open interest is growing and the implied volatility is actually rising, that could be just continuation traders looking for this to not be over anytime soon. So the market will tell me on that as I look for open interest shifts. What's got the lowest IB out there right now? Carvana, Netflix. Is Carvana impacted much? Okay, there could be something interesting there. So we had the very bullish earnings, the pullback, and now the recovery and implied volatility at lows. And if we make a new high, that just, I don't know where the resistance would be here after that. Let's go back to Ford real quick. So a little bit of a fade to moving forward. Yeah, so GM, I'm not as big of a fan here now, half an hour later, now that it's pulled back below the previous highs. So it's a very choppy market. We can have some very quick shifts. This first 45 minutes is certainly telling, but it's part of the reason that I did say, and I still believe for today, unless I'm looking for like short-term day trades, in and outs, building the bullish trending type names comes this afternoon or tomorrow or Friday, more so than right now. Right now, it's all about just trading the whipsaws. Cost. Let's look at those guys. Cost pulling back. Okay. Go ahead, Textron instead. Textron looks very nice here. Got back into the range. Support should be there at 84.30. How low is implied volatility? It has ways to go. Earnings not for a while. It's still $4, but an 80-85 call spread for $4. Looks like another one of those 15, 20% kind of winners, kind of trades for not necessarily betting on continuation, but lack of pullback. As long as we stay here, I mean, 85 would have to provide that bigger number support levels in the 84.5 to 85 range. That could be an intriguing entry point there. CCJ just chilling here. AI continuing firm. Wow. Is path getting dragged up now again? Yes, it is. Okay. What are my no 13s up to right now? 35. Okay. Almost a double in a day. Makes up for, like I said, the Wayfair pullback. Although Wayfair is bouncing back. All right, so here's, I may look to add to Wayfair today. I was either thinking about an exit and walk away, but if we get above that 41 level, back up to the highs, 40.5 to 41, and then the concern on Wayfair goes away. The implied volatility is getting down near the lows. I still think there's resistance here up at 55, but I might look for a add-on. So I'm in the Jan 45.55 call spread for, is it 285, I believe? Yeah, 285. But I might just add another 45 call here. So I have like half long the 45 calls and then half my position long the 45.55 call spread. And then if we do continue to rally, look to sell a 55 call against it or take the money on the 45, depending upon what implied volatility is doing and how aggressive that rally looks. So kind of managing that trade that initially looked very bearish, but if it bounces back above 41, it starts to tell me that the rally yesterday may have been more of the story than the pullback today. So to be determined. USO. Are we pricing in increased expectations of tensions in the Middle East and with like Israel and stuff, maybe? Because I mean, that was a big selling point for Trump's campaign, right? That oil prices would fall under his regime. And the expectation was that energy prices could go higher under a Democratic presidency. And we're not really seeing a move in oil here. If we get back below today's lows, I think that's the probable time to say that the market is looking at oil as a bearish setup. And if not, there's something else that I'm missing here that's causing oil to be so unchanged on the day. And so I won't do anything crazy until I see confirmation that the market is starting to see oil bearish. Oh, nice recovery in Cleveland Cliffs. Bad earnings, then complete bounce back. US Steel, good. NUE looked like it was a good one today. These names that had bad earnings, they're pricing in that that's all behind them now and that this can just be like on a dime, switch from bearish to bullish names. Yeah, I don't know on NUE, to be honest. Starting at the top and working our way down, TLT, a little bit of a bounce back to be able to get a little more premium for like a 92, 95 call spread. Avoiding SMH for the moment. And that means avoiding NVIDIA or, bullish semiconductor here looking like a breakout. And if SMH starts to lead tech again, then I start looking more intrigued with NVIDIA or Micron. Micron a little bit better maybe right now because we just did have that bullish earnings. So that seems like one of the safest plays within that semiconductor sector and avoiding the AMDs and the MCHPs that didn't. What else do you guys see out there that you're intrigued by? There's another marijuana stock getting hit, Tilray. Down to $1 or $1.50, whatever. That's a problem for them. This impact diabetes companies at all? They had their earnings today after the close, so Nothing there. About, how low can the VIX go? I start looking out for next Wednesday. No volume, no real liquidity. Serial month. See, the target's really 15. That's got the big target on it. Possibility of overshooting. But already the 16-15 put spread is over 50 cents. The expectation here is grind lower in the VIX. How much is the SQDX down? Expectations there. Correlations dropping. That's good. Gets us into the individual names after these bigger TLT, GLD, Bitcoin related names. Let's see some of the other big tech, Microsoft. Yeah. That's getting more buying, but so close to the lows still, and only a 1.5 to 2% move for today may not be enough with the overall market move. Walmart, yeah, we'll pull Walmart back up again. Yeah, so I still say that with Walmart, as long as we stay above this previous high, which may have been there, was 83.77. Yeah, so call it 83.77 here, the previous high, which was yesterday. As long as we stay above that, Walmart still looks good to me, but that's a debit spread for sure. With earnings on the 19th, it's a potentially shorter term hold, unless if you've got the bias that the earnings announcements, earnings is normally about 5%, so that would put us right up towards 90. So for the earnings term, it would be the November 22nd, like 85. Maybe 86, 90 call spread. If I want to be out before earnings by using just the week and a half options, maybe just an 84 call for November 15th. Going right at the money. This is only 20 balls. So I guess an 84, 87 or an 84, 86 call spread. So trading for the rally back to the session highs. So maybe an 84, 86 call spread for 80 cents. And then looking for that to potentially achieve the full value over the next week and a half if it stays above yesterday's high. WBA. I struggle with WBA because I look for this one to go down. Generally just off of a bias, and my fundamental knowledge of WBA is not as strong as the rest of the market. So I have like this underlying bias of expecting bearishness, even though the chart moving towards 12.5. But if I go into like leaps, like, January of 26, like a 10, 17.5. How high were we before? It's kind of it's a very defined risk, but like a 10, 17.5 call spread could really tighten up these markets. They're very wide for a $9.50 stock, 36 cents wide. It looks like the market actually has been putting on a 10, 20 call spread, or even a 10, 20, 30 call butterfly, like looking for prices back towards 20 if it ends up bullish. I'd say like a 10, or if in June, like a 10, 15 call spread. It just seems unlikely that it would be a drastic turnaround. But the last earnings was okay, and then we faded that. So tough one. Novi. Yeah, so this is so Salesforce is continuing on the firm side. How about like some of the other business related stocks, ADP, about PayX? They're all kind of there already. Bill, yeah, if that's already got it. Paylocity, how about them? Too much move already. I mean, the market knows which ones to pull up to. So they bought them all. What's this TFC? Oh, another financial. Okay. Another bullish financial, Kinder Morgan, popping. There we go. That could be interesting on the bear side. So we're real close to the lows. There's really no support here. It's been a trending lower stock. I mean, we all like chocolate, but if the company can't make money off of the chocolate, then maybe Hershey's start to look for that continued bearish trend. This is not the turnaround for it. We've been using the 10-day moving average as resistance. We tried above it today and failed. Hershey's starting to set up for a bearish spread type trade. How fast has this been falling? From October, call it 4th, 192.30 down to 179.80, so about $13, $12.50 a month. So down towards like 167.5 for December 6th. Right between these strikes, like a 25 delta-ish put as the target. Maybe 165 by December 20th. So Hershey's maybe looking at a 175, 165 put spread for a little bit of leverage, 2.5 to 280 range, 280 probably for that. So Hershey's could be a bearish name here for us. Yeah. So what we often also do find with like Hershey's and these other commodities reliant companies is that with cocoa, when cocoa prices go up, they raise the prices on their candy bars. And then when cocoa prices come back down, they just leave the prices higher. So then the margins come back. Or they shrink the size of the candy bar. And then when the prices come back, a common theme for Starbucks over the long run as well, when coffee prices spike, they raise their prices. When coffee prices start to come back down, lo and behold, our coffee is still $4 or for just a black coffee, right? People used to argue that you'd never get $1 for a cup of coffee. So how could Starbucks survive? Well, now they're charging $4 for that same cup of coffee and people buy it. I'm drinking one of them right now just because I was lazy this morning and I wanted to get out of the house to grab a Starbucks rather than making my coffee at home. So, you know, it works. The model still works for them. Raise the prices when the commodity goes up and leave the prices high when the commodity comes down. You know, with like oil prices and stuff and gasoline, they're subject to the market movement. It just seems less sticky in the chocolate and coffee side of things. Yeah, I usually make coffee at home. You know, going back to the Costco thought, I go to Costco and I buy a big bag of coffee and it costs me the same as 3 days at Starbucks, but lasts me 2 months. So that's my normal operating procedure on Costco. But I'm kind of surprised to see. Yeah, so XRT is firm. Is it like, it's not Restoration Hardware. We're getting into some more buying of premium products. I don't think Saks doesn't exist anymore, right? Yeah. JWN has their corporate action trying to be acquired situation. What about Lululemon? They're weak on this. Nike, weak. Home Depot's likely weak. Lowe's. Is it LO? No, that's the finance. There it is, LOW. Yeah, weak. I think this might be one of the ones that I like more for a short watch list for today. That was Raytheon. Like, defense spending usually goes up here. Lockheed Martin pulling back so much. Raytheon. What's the name of Smith & Wesson now? It's like American. something. You guys remember what that changed to? You can look it up if you guys don't know. Smith and Wesson Company. American Outdoor Brands. There we go. Out. AOUT. That's a small move for zero volume trade. I guess there's nothing to do there. Can't trade those options with that market, but kind of expected them to do something today, and it didn't happen. So anyway, it's a lot of chop. It's a lot of stuff to watch, but this will all get clearer as we get through today. I'll be on for the close tomorrow. We should have some more clarity on other stuff. Like I said, I actually really still like TLT. I like Raytheon for an individual name. The banks maybe too fast for me. I'm going to stick with PATH and CCJ. If we stay here, I'll probably just stay with my call spread. And if we get up towards 53, I'll just take off half of my position and ride the other half for earnings. So that's how I'm going to approach this for now. I do still like Walmart above 80, above the previous high, 83.74, I think I said it was. BLK needs to get back above the highs, but it's also a high dollar stock, so it may not be accessible to everybody. And then looking at, if you got into any of those bank names off of the aggressive power trader last week, it's starting to get ready to take the money on those. Twilio from yesterday has had some nice follow through, but that may be coming close to a consolidation period here as we start to see it slightly down today as well. So we'll see how it all goes. But yeah, I think overall this is, it's good for the market. And then the other one that I got to keep a close eye on here is oil. If oil starts to fall, I get more intrigued on the bearish side. But as it sits here at 74.37, I just have to assume that I'm missing something, and I'll miss the first. The next, if it does fall, I'll miss the move down to 73.25 and start getting bearish below for that continuation down. I'm not going to fight against it right now. If market's buying it, they're seeing something I'm not. And so I don't want to be caught on the wrong side just because I'm trying to force that one. But this is good to see PATH above 13. I will note that 09, 13, 10 range above these kind of levels does start to get some potential squeeze here. So I'll let that ride for now, especially with the way that AI is performing and PLTR is performing on the upside. Sticking with some of those AI names. All right, folks, I will talk to you tomorrow afternoon. Good luck today with it if you're looking at some active day trading, or if you want to just wait for some clarity. I don't think anybody would fault you. No need to force a trade when you don't have to trade. So good luck to you all, and I will see you in the afternoon tomorrow. Have a great day.